Hey guys, what's up? Alec back with the daily stock market, and look at that. We have Snapchat down 19% on the day after having a green day and was up 6%. We also have Amazon that was up 4%, and then it went on to go after hours with a positive earning report and was up as much as 11% after hours. Now it's starting to cool off. So in this video, we're going to talk about both of those stocks. We're going to deep dive into it. And we're also going to be talking about Meta platforms in this video because they're up 13.9% on good earnings. All these stocks are extremely volatile because of their earnings report. So if you want to dive into the earnings report, see what's going on with Amazon stock, Meta platforms, and Snapchat, this is the video for you. Before we do that, hit the subscribe button on YouTube, the only place to find the full-length videos. Hit the like button so that way I know you want more videos like this one, and let's dive right into it. Okay, so first up, let's talk about Amazon. As we scroll down, we can see a few different things that's going on with Amazon. We can see that they have a negative PE ratio right now because they did report negative earnings last quarter with a market cap of $1.12 trillion as their market cap. As we continue to scroll down, we can see they beat on their EPS 35 cents what was reported, and it was expected to come in at 21 cents. Last quarter, the one right before this one, came in at negative EPS, remember. So some highlights that we can see: Amazon Q1 revenue and EPS was beat. AWS was up 16% year over year, and Q2 guidance and more. Amazon's North American revenue was up 11% year over year. International revenue totaled $29.1 billion, up 1% year over year. AWS, which is one of their fastest growing segments right now, sales were $21 billion in the first quarter, up 16% year over year. AWS is also starting to account for a larger part of their revenue, so that's why it's a big thing people are watching recently. There's a lot of talk about how our teams are delivering for customers, particularly amidst an uncertain economy. Amazon CEO Andy Jassy said, "Our stores business is continuing to improve the cost to serve in our fulfillment network while increasing the speed with which the products get in the hands of our customers. The company saw robust growth in advertising businesses," the CEO stated, and he went on to say more about the AWS. Okay, language models and generative AI were cited by the CEO as tools to help AWS customers. The company highlighted the results of Creed 3 at the box office from its MGM unit, the Amazon Original Limited Series Daisy Jones and the Six, and the exclusive rights to the first ever Black Friday NFL game on November 24th, 2023 coming up. So that's going to be extremely bullish for next quarter as well, and as we approach that date. What's next? Amazon is guiding for second quarter net sales to be in a range of $127 billion to $133 billion. And the data shows that analysts are currently forecasting sales around $129.83 billion. So the guidance came right as expected, maybe even a little bit higher on the guidance because they said it could be as high as $133 billion. Amazon shares are up 10%. So if you've been following along with the last few videos in the last few months, you know that I've been dollar cost averaging in Amazon for over a month, under $100 per share. We're up over 22% on our swing trade in the close friends list. By the way, if you guys want to join the close friends list, now is a great time because I just did a refresh, and we're also seeing a lot of stocks bouncing back really hard on 2023. We'll go over Meta next, but they're up around 100% just in 2023. So we're starting to see a nice bounce back here. So personally, I want to buy large amounts under $100 per share and closer to $90 per share, but I don't mind dollar cost averaging in for with Amazon for the long term, although I think there is a possibility they could fall under $100 per share once again. Moving over to Meta platforms, up 13.9% on the day, and if we scroll out to the last 3 months, we can see they're up 60%. Okay, and if we go from November 4th, which is a little bit further back, we can see that they're up 168%. And if we go from the new year, we can see they're up around 98%. So needless to say, Meta Platforms has been one of the best performing stocks. And if you are a big follower of the channel, you obviously know that Meta Platforms was one of my favorite stocks under $100 per share. We couldn't stop talking about them under $100 per share, and we couldn't stop buying them under $100 per share. So lots of people are up 100 to 150% on the swing trade on Meta Platforms because we timed that one at a good time. My average cost was closer to around $112 per share, but even at that price, we're still up around 80 to 90%. And Meta Platforms is just a great business. Even at the current price of $238 per share, we see the PE ratio is around 25, implying that it's still a good price to be dollar cost averaging into for long term. Meta Platforms' AI initiatives and real progress praised by analysts after 2022 saw hate selling of stock, now a de-risking story. And a lot of people were kind of just trying to, hate sell on Meta Platforms because of Mark Zuckerberg and the privacy concerns. But people are realizing how good that the business is actually intact and how strong the revenue and net income is and how many daily active users they have between Facebook, Instagram, WhatsApp, and some of the other platforms they own as well. Meta Platforms analysts see strength in real segments. Growth through AI is mostly seen as positive by analysts. Okay, if we scroll down, we can see that some analysts had an outperform rating and raised the price target from $238 per share all the way to $287 per share. Okay, another analyst raised the price target from 250 to 275. And what we can see is a lot of different analysts are talking, and one of the analysts from the Oppenheimer Group said the first quarter results and guidance from Meta Platforms were better than expected. Engagement metrics remain solid this quarter with particular strength from Reels, and Meta noted that since the launch of Reels, AI recommendations have driven a 24% increase in time spent on Instagram. Also, Meta believes it's regaining share in short form video content. Okay, so that's very interesting to think about. Obviously, TikTok being the main competitor right now, and YouTube Shorts trying to be a competitor as well. The analysts saw Meta Platforms posting long-term advertising growth of 5% to 10% and increased monetization efforts from items such as Reels. Another analyst, William Blair, also cited the strong Reel engagement for the company, but said it could be more of a long-term item for the company. While Reels remain a revenue headwind at the present moment, Reels is still expected to be neutral to the overall revenue either by the end of 2023 or early into 2024, the analyst said. Also highlighting Meta Platforms' comments on artificial intelligence during the first quarter results on the earnings call. The company highlighted its existing AI initiatives, including its recommendations and ranking infrastructure. Currently, more than 20% of its content placed within the Facebook or Instagram news feed is recommended by AI, from groups to accounts that users do not already follow. The analyst said Meta Platforms emphasized the importance of AI and will continue to invest in the growing sector. Bernstein questioned if Meta Platforms' digital ad moat has deepened given the strength in the first quarter. Now, if you want to pull up the financials on Meta Platforms, you can see why they are such a strong stock. In 2018, they had $55 billion in total revenue. Now they have $116 billion, growing double digits every single year, except for in 2020. If we go over to net income, in 2018, they had $22 billion. In 2021, they had $39 billion. Now they're a little bit less profitable, but if we pull up the quarterly graph, on net income, we can see that that's even shrinking as well. So that is a little bit of a red flag on total income, but total revenue is looking a-okay. It's looking awesome. And if we scroll down and look at their balance sheet, the debt to assets is one of the best balance sheets in the entire stock market, with only a 32% debt to assets ratio. So you'd be very hard pressed to find a better balance sheet than something like Meta Platforms' balance sheet. And overall, if we look at what analysts have to say about Meta Platforms and you just lump all the analysts together, on average, we have a 12% upside still on Meta Platforms over the next 12 months to $267 per share. The lowest analyst has a $110 price target, and the highest one has a $350. If we scroll down, we can see that these are all recent reiterates from just yesterday from all 5-star analysts. We have a Bank of America's analyst, 5-star analyst, with a success rate of 64% and average return of 19% at a $300 price target on Meta over the next 12 months. If we also look at a Goldman Sachs analyst with a 60%, he also has a $300 price target. Ronald Josie from Citigroup has a $315 price target. So not many analysts, as we scroll down, have anything under the current price. There's a few 5-star analysts, as we can see here from Cohen & Co., 54%. John Blackledge, a $220 price target. These were all reiterated yesterday, and most are above $250 per share. So dollar cost averaging into Meta, even at the current price, could be a good thing to be doing. However, I want to buy under $200 per share and even closer to $175. And the last stock that we'll be talking about is Snapchat, at down 19% after hours on the earnings report. They were at $10 per share. Now they're at $8. And if we look at the year, they're down 69%. So this is basically a dead stock at this point. In 2018 at the very low, they're at $5, $4 per share. So is there a chance we can see Snapchat go that low? There definitely is a strong chance that we could see Snapchat go even lower. We've seen Snapchat miss revenue expectations this month, and then they warned of a future quarter decline coming up as well. So they had bad guidance that they put out, which caused the stock to tank even further. Snapchat missed analyst expectations for quarterly revenues as recent changes to its advertising platform hurt demand for ads, and it also warned the next quarter could be below Wall Street's targets. Shares of Snapchat dropped 19% in aftermarket trading. Now, Snapchat said it's not going to be performing any formal financial guidance for the next quarter. Its internal revenue forecast for the second quarter is $1.04 billion, which would be a 6% decline year over year. The internal forecast is below analyst expectations of $1.13 billion, and that's why we saw Snapchat nosedive. In a letter to investors, Snap said it was taking steps to improve the relevance of ads shown to users and simplify how people can interact with Snapchat ads. And by the way, they beat on their EPS. Their EPS came in at 1 cent, and it was expected to come in at negative 1 cent. So they beat by 2 cents on their EPS, which is a very interesting thing. It's obviously just the revenue and the guidance that's really dragging Snapchat down right now. I would also like to look at daily active users because that's an important thing to be tracking, and I see it here. Daily active users on Snapchat rose 15% year over year to 383 billion, in line with Wall Street's expectations. So that's a good thing, suggesting that Snapchat app is not necessarily a dead app if it's growing its daily active users by 15% year over year. So that's a huge thing to keep an eye on. Snapchat said it expects between 394 to 395 million daily active users in the second quarter. So they're expecting to continue to grow active users. As long as we don't see those active users, those daily active users dipping a lot, that's going to be the biggest red flag in my opinion. So overall, I'm leaving Snapchat alone. I'm not buying them. I don't own them. I don't hold them. I mean, if they get to $4 per share, $5 per share, it's going to be hard to pass up buying a few hundred shares at that price point. Because if I buy 100 shares, it's only $400, and I could hold it for long term, and the shares could have a huge bounce back if something good happens with the business. Obviously, that's high risk, high reward, and that's how you have to view Snapchat stock. And if you want to get on the Discord, by the way, we have daily success coming in every single day from students over $130 profit, 74% gains. We have an AI, artificial intelligent bot that sends signals. And here you can see someone called out, said this one's from the bot, an AMD call up 100%, $1,000 made from our AI bot. So I also post direct signals from me. So you can, if you want signals on option trades, calls, puts, where to buy, strike prices, this is the place to join. Also have the AI sending signals and some top traders in here posting some of their calls as well. Over $1,800 made on this meta call, and they held it again overnight. So they should be up a large amount. Okay, Amazon up $687, and it's up another 10% after hours. So this option right here is going to be worth around $6,000 to $10,000. If you want to get in on the action, make sure you message me on Instagram. Now over 200,000 followers on Instagram, which is a huge milestone. So go ahead and show some love in the comments below. Hit like on this video. As long as you keep liking these videos, I'll keep making them for you. Share this video with a friend. DM me on Instagram to join the Discord and the close friends list. And I'll see you guys in the next video. Remember, don't time the market, buy the market. Peace.